QNT stock just had one of the most important quantum IPO debuts of the year. Quantinuum priced its IPO at $60, then it opened around $68. For a moment, it looked like Wall Street was ready to chase the quantum computing story, but by the close, most of that early gain was gone. So what actually happened? And more importantly, is QNT now a buy, or is the market already warning investors? Let's start with the facts. Quantinuum priced its IPO at $60 per share. The company sold 28 million shares and raised about $1.68 billion. That was above earlier expectations and showed real institutional demand. Then the stock opened around $68, about 13% above the IPO price. But the enthusiasm did not last. By the close, QNT finished around $60.38. That is the key signal. The IPO was strong, the opening pop was real, but the market did not keep chasing the stock. There are three reasons the QNT pop faded. First, valuation. Quantinuum is an exciting company, but it is still very early commercially. The company generated only $30.9 million in revenue in 2025. That is tiny compared with the valuation investors were being asked to pay. Second, quantum stocks are volatile. IonQ, D-Wave, Rigetti, and now Quantinuum all sit in a sector where investors are buying a long-term technology promise, not current earnings. That creates huge upside when sentiment is strong, but also sharp downside when investors question the timeline. Third, the broader tech market was under pressure. When high-growth technology stocks weaken, speculative names like quantum computing usually feel the pressure first. So QNT did not fade because the company is suddenly broken. It faded because the stock entered public markets with a very high bar. The core issue is valuation. At roughly $15.7 billion of market value near the first-day close, investors were still paying more than 500 times 2025 revenue. At the opening pop valuation, that number was even higher. This is not a normal growth stock multiple. It's a bet that Quantinuum becomes one of the few category winners in quantum computing. That future may be real, but the timing is uncertain. And when timing is uncertain, valuation matters even more. Here's the detail many retail investors may miss. Reuters reported that Japan's Riken Research Institute accounted for roughly 60% of Quantinuum's 2025 revenue. That does not mean the business is weak. In early quantum computing, research institutions and government-backed organizations are important customers, but it does mean investors need to watch revenue concentration closely. The question is not just whether Quantinuum has world-class technology. The question is whether it can broaden the customer base and turn research-driven demand into repeatable commercial revenue. Now, none of this kills the bull case. Quantinuum still has one of the strongest stories in quantum computing. It has Honeywell behind it. It's a full-stack quantum company with hardware, software, cloud access, cybersecurity applications, and enterprise research relationships. It also raised a very large amount of cash. That matters because quantum computing requires years of investment. If Quantinuum becomes one of the few companies that can commercialize fault-tolerant quantum computing, today's volatility may look small in hindsight. But the bear case also got stronger after the IPO debut. Buyers did not defend the early gains. That tells us investors are interested, but not willing to pay any price. QNT still has to prove three things. First, that it can convert scientific leadership into repeatable commercial revenue. Second, that customers will pay meaningful money for quantum solutions before the end of the decade. And third, that the company can manage cash burn without repeatedly diluting shareholders. Until those questions are answered, QNT is not a normal investment. It's a high-risk, long-duration technology bet. My verdict is simple. QNT is one of the most important quantum stocks to watch, but the IPO debut showed that investors are not blindly chasing the story. The stock popped, then faded. That is not a failure, it's a warning that valuation still matters. For now, QNT is a watchlist stock, not a stock I would chase without more public company data. If you want the full business model, valuation, and peer comparison, watch my full Quantinuum IPO deep dive on the channel. and comment QNT if you want a full Quantinuum versus IonQ next.